All right, let's dive right in, shall we? Today we're looking at the smart investor, and they've got some fascinating analysis on market trends and some strategies you might not expect.
Yeah, what struck me is they're really not afraid to go against the grain, looking at potential overvaluations, even in those so-called safe stocks, and even diving into some pretty bold predictions.
Like Tesla and their autonomous driving gamble.
Exact.
That's why we're doing a deep dive on this, right? Hedging strategies, market trends, and yeah, even Tesla's future. Ready to jump in?
Let's go.
Okay, so this hedging strategy, put options on Costco and Walmart. Now, that's not your typical play.
Not at all. It's definitely different. But the smart investor is talking about these dragon stocks,
Yeah.
these huge, well-established companies that, well, might be more vulnerable than people think.
They're saying even the giants can fall.
Right, and they're pointing to those 4 PE ratios. Walmart, something like 40 times earnings. Costco, even higher, 55. Those are big numbers, even compared to tech companies like Meta.
Wow, that puts things in perspective. So basically, these safe haven stocks, they could actually take a bigger hit if the market dips.
Exactly, and that's where the put options come in, like an insurance policy, but with the potential for, well, significant returns if those prices drop.
Okay, now, I know some of our listeners are familiar with options, but for those who might need a refresher, how could these put options work in this scenario?
Sure, a put option, it gives you the right, not the obligation, to sell a stock at a certain price. Right. So let's say you buy a put option on Costco at, let's say, $100. If Costco stock drops below $100, you can exercise that option, sell those shares at $100, lock in a profit.
So you're essentially betting these safe haven stocks could fall further than expected. Is that risk worth it for the potential reward?
It's definitely a calculated risk, but that's what makes it interesting, right? Challenges the idea of just sticking to blue chip stocks when things get uncertain.
Okay, let's move on to Trade Desk. They've had a rough time lately. Josh Brown leaving, missed earnings, guidance lowered. Is this a buying opportunity or a sign of bigger problems?
Tough to say, honestly. Even though their forward PE has dropped, it's still at 46. Lower than Costco, sure, but still high.
So is it overvalued or is the market overreacting?
Well, the smart investor highlights Trade Desk still has strong points, 23% revenue growth year over year, and those margins, 80% gross, 15% net, that suggests long-term potential.
So what's the verdict then? Is Trade Desk worth the risk right now?
The smart investor seems to think it might be a good buy, but there's a catch. It all depends on their next quarterly report. If things stabilize, then maybe it's a good time to jump in.
Q1 earnings, guidance, those are going to be key. All right, let's zoom out. Look at the bigger picture. Bull market hanging in there despite concerns about tariffs, inflation, the Fed's next move.
It's a balancing act, for sure. The Fed trying to control inflation but also not tank the economy. And, a strong February CPI report, that could really change things.
We're all waiting for that CPI data. How would a strong report affect the market?
Well, it could mean the Fed holds off on rate cuts, and that could spook investors. But even with all the uncertainty, there are good signs like strong productivity numbers, and we're seeing gains in different sectors, not just tech. Industrials and financials are doing well.
The smart investor seemed really interested in that sector rotation. Why is that good for the bull market?
It's a sign of diversification. Investors looking beyond those mega cap tech stocks like Meta and exploring other options means there's an appetite for growth in different parts of the market.
So for the average investor, what does this sector rotation mean for them?
Diversification is more important than ever. Don't just chase the hot tech stocks. Look for value in those overlooked sectors that are starting to pick up.
All right, that makes sense. Now, let's talk Tesla and this prediction that their autonomous driving tech could make them a trillion-dollar company. Realistic or hype?
Well, Dan Niles, the guy who made that prediction, he's a respected investor, but even the smart investor is adding a dose of reality here. Widespread use of self-driving cars, that's still a long way off.
So not impossible, but it's a long game.
Right, and a lot of hurdles. For one, the competition. Google, Amazon, Uber, they all want a piece of that autonomous driving market.
And then there's profitability. Will these robo-taxis actually make money?
That's the trillion-dollar question, literally. The smart investor doesn't see big profits from self-driving cars before 2030.
So this trillion-dollar valuation, far from a sure thing. What other risks did the smart investor point out for Tesla?
They brought up Elon Musk's political leanings and how that could affect Tesla in China, a big market for them.
Geopolitical factors, huh? This is starting to sound like a risky bet.
It is. That's the takeaway. Tesla's future depends on them executing perfectly, navigating all these challenges, and convincing everyone their vision is worth betting on.
So is Tesla's bet on self-driving too risky, or are they onto something big?
Only time will tell, right? But it's a perfect example of how even the most innovative companies face big challenges and how investors need to weigh those risks and rewards carefully.
Okay, we covered a lot. Those unconventional hedging strategies, the bull market's balancing act, Tesla's gamble.
Mhm.
What are some key things our listeners should remember as they navigate this crazy market?
I think the biggest thing is don't get complacent. Don't just assume those traditional safe investments will always be safe. Think critically, challenge those assumptions, be open to new strategies.
And remember, even when the market seems strong, there are always risks.
Exactly. And the smart investor stressed staying informed, diversifying, and looking at those unusual approaches like the Costco and Walmart thing to manage that risk.
Thinking outside the box, being proactive, staying ahead of the curve. What can our listeners do to protect their investments and take advantage of potential market shifts? We'll talk more about that in part 2 of our deep dive into the smart investor. Stick around.
Welcome back to our deep dive into the smart investor. We've uncovered some really interesting stuff, and there's so much more to explore. I'm particularly interested in those tools and perspectives they give for, navigating this market.
Yeah, it's about empowering investors, right? Making informed decisions, not just reacting to, well, every little market blip. Speaking of empowering, I'm curious about that THX membership they offer. Sounds pretty comprehensive.
It really is. It's like unlocking this whole treasure trove of resources, in-depth analytics, earnings call transcripts, even educational modules to help you level up your investing game.
Okay, break it down for me. What kind of analytics are we talking about here? Give me the specifics.
They call it 1000x analytics, and they're not kidding. Deep dives into company financials, market trends, even sentiment analysis. It's about getting a clear picture of what's actually happening, not just the headlines.
So not just the surface stuff. You're getting a, behind-the-scenes look at the data.
Yeah.
And what about those earnings call transcripts? Why are those so valuable?
You get to hear it straight from the company leaders, unfiltered. Their strategies, their outlook, their concerns. It's like being a fly on the wall during those important conversations.
That's incredible. Like getting a glimpse into the minds of the people actually shaping the market. Now, those educational modules, what kind of topics are they covering?
They've got everything. Modules on different investing strategies, risk management, understanding market dynamics. It's like a personalized crash course in investing.
This is starting to sound like the ultimate toolkit for any serious investor. But is this THX membership exclusive? What's the cost?
They actually have a special offer for the Smart Investor listeners. You can get access for just $30 a month, or you can do a 2-year plan and save like $800.
That's a great deal, especially for the amount of stuff they're offering. They clearly believe in the value they're providing.
They do. And the Smart Investor says even a month's access could make a real difference in your investment strategy.
And in a market like this, volatile, unpredictable, having that edge, well, that could be everything.
It's about making those smart strategic decisions that set you apart.
Okay, let's go back to something we touched on before. The idea that market corrections are always possible. That's a bit, unsettling.
Yeah, it's a reality, right? We can't predict the future, but we can definitely prepare for those downturns.
And that's where building resilience into our portfolios is so important. Diversification, strategic hedging, really understanding those market forces.
Exactly. It's not about eliminating risk. It's about managing it intelligently.
So let's get practical. What can our listeners do today to start building that resilience and maybe even profit from those potential market shifts?
First step, I think, is honesty, right? Be real with yourself about your risk tolerance. How much volatility can you handle? And your goals, are you looking for quick gains or long-term growth?
Those are such basic questions, but so many people skip them.
It's crucial, though. Once you know your risk profile and your goals, then you can build a portfolio that works for you.
And that's where the smart investors' insights on sector rotation come in. Knowing which sectors are heating up, which are cooling down, and adjusting your portfolio accordingly.
Exactly. And don't be afraid to think outside the box. Remember those unconventional hedging strategies. Those put options on Costco and Walmart. It's about challenging the status quo and finding new opportunities.
Being proactive, right. Not just reacting to the market, but anticipating those shifts and positioning yourself to benefit from them.
Exactly. And staying informed, of course. Reading things like The Smart Investor, watching those economic indicators, even listening to podcasts like this one.
Knowledge is power, especially in finance. The more you understand, the better your decisions will be.
And speaking of powerful tools, that THX membership from the Smart Investor, those deep analytics, those transcripts, those educational modules, that can give you a real edge, help you invest with more confidence and clarity.
It's about giving everyday investors access to the same kind of information that the pros have.
Exactly. That's what makes this deep dive so valuable, right? We're not just summarizing, we're digging into those underlying dynamics, those market forces that are at play.
It's about understanding not just what's happening, but why it's happening and what it means for your own investments.
And that's what sets the smart investor apart. They're not afraid of those tough questions, those different viewpoints. They make you think critically.
And that's what makes investing so interesting, right? It's a constant learning process, a puzzle to solve, a game of strategy.
And the smart investor gives you the pieces, the strategies, the insights to help you, win that game.
Okay, we've covered a lot, but there's one more important thing from the Smart Investor I want to share. It's a quote that really captures what smart investing is all about.
You mean that quote at the end? The one about market corrections always being possible? It's a reminder that we can't predict the future, but
We're not helpless, right? We can prepare, we can build that resilience into our portfolios, stay informed, be ready to adapt.
that's where the real power is, not in avoiding risk, but in understanding it, managing it, and maybe even using it to your advantage.
Well said. So, to our listeners, as you keep investing, remember what we've learned from the Smart Investor.
Be agile, seek different perspectives, never stop learning. The market rewards those who are prepared, adaptable, and always looking for that edge.
And most importantly, knowledge is your greatest asset. Stay informed, stay curious, and keep diving deep.
And hey, you don't have to do it alone. We'll be back in part 3 to explore even more insights and strategies from the Smart Investor. Stay tuned.
And we're back for the final part of our deep dive into the Smart Investor. It's been a wild ride, hasn't it? Unconventional hedging, Tesla's big bets, we've covered so much.
Yeah, the Smart Investor really doesn't hold back. They get right to the heart of these complex topics.
And that's why this deep dive is so important, right? We're not just summarizing, we're breaking it all down, analyzing it, figuring out what it means for the everyday investor.
It's about giving people the knowledge to make smart decisions, take control of their money and navigate this market with confidence.
Confidence, that's key. And the Smart Investor really emphasizes agility. Things change so fast these days, you got to be able to adapt.
Right. They talk about staying informed, diversifying your portfolio, even considering those less conventional approaches like those Costco and Walmart puts to manage risk and find opportunities.
Thinking outside the box, challenging assumptions, being ready to change course when the market throws a curveball, and that's where their sector rotation insights come in handy.
Yeah, knowing which sectors are hot, which are not, and adjusting your portfolio accordingly.
It's like they're giving you a map to navigate those shifts, helping you anticipate the changes and make strategic moves.
Exactly. And that brings us back to that always present thought, those market corrections.
It's the big question, right?
Yeah.
No one can predict the future,
Yeah.
but we can definitely prepare for those downturns.
And that preparation, that's what separates those who succeed from those who, well, get caught off guard.
Building that resilience into your portfolio, diversification, understanding those hedging strategies that can help you weather the storm.
It's not about being scared of risk. It's about knowing it's there and having a plan.
The Smart Investor gives you those tools, those insights, that reality check that every investor needs. They don't sugarcoat it, but they give you the power to face those challenges.
And I appreciate that honesty. It's
Yeah.
insightful. It's valuable for anyone serious about building wealth.
They make you think critically, question what you think you know, and make decisions based on real data and analysis.
It's about taking charge of your own financial future, not just following the crowd or the latest trends.
So as we wrap up, one final thought from the Smart Investor. They say knowledge is your most valuable asset.
They encourage us to always be learning, stay curious, look for different perspectives, and keep digging deeper to understand the market.
Because the more you know, the better you can navigate the ups and downs and make those decisions that lead to success.
It's a journey, right? You're always learning, always growing as an investor.
And that's what we've tried to do here today. Explore those key takeaways from the Smart Investor. Remember, stay agile, diversify, consider those unconventional strategies, and never underestimate the power of knowledge.
And remember, this isn't the end. The Smart Investor has tons of resources and insights to help you. So stay curious, stay informed, keep diving deep.
And that's it for this deep dive. Until next time, keep exploring, keep learning, and keep investing in your future.